it really time to panic now? Markets are having a hard time recovering from lows or not punching up to higher highs anymore. Well, I think any of you who know me at all know it's never a time to panic. We just change our strategy as market trends shift. I'm Raghee Horner, if you don't know me. I'm the lead trader over at the Sector Secrets Mastery, as well as the Simpler Futures Room. And let's talk about August for a moment. Is August acting really all that weird? It's not, actually. August is not acting outside of its sort of normal characteristics. It's choppy. Over the last 5 years, it's been choppy, but generally kind of bullish. Over the last 10 years, it's been choppy, but kind of bearish. I'm going to use the last 5 years because the last 5 years have had a fairly unique monetary policy, which is to say, generally speaking, this has been a very accommodative policy. And even with the rate hikes, we're still seeing pretty well-supported markets. And we're getting ready to go into a pause and then even potentially cuts as we go into probably March to May of next year. But even if we don't cut, stopping the hikes in and of itself are going to give the equity markets some lift. So let's talk about this. What is happening? Well, what we're getting is some weakness. But is it weakness outside typical market movement? In other words, is it outside historical volatility? And the answer to that is no, it's really not outside historical volatility. So that's the first cue that there is no panic, just not as much of a willingness to buy at higher highs as we saw through July. July is a very historically a very bullish month, right? August is choppy. So the first thing that we do as traders is acknowledge a different type of behavior in July versus August. And then we can say, yeah, we're going to chop around a bit. And as we've talked about before, shorten the time frame. Focus on day trades. Focus on short-term 1 to 3 day swings. Things like that are going to be really helpful as we adjust for August and maybe even into September. All right. Now, we are finally, let's talk about some levels here and let's talk about some setups. We are finally at an oversold, here we are down at the low of the slow stochastic in a neutral market trend. This is setting up an oversold buy, gang. Now where? So we have the environment. Where could it be setting up the buy? Right here inside the historical daily price movement range or historical volatility. Now, is S&P my first stop? It's actually not going to be. S&P is a nice oversold potential buy. And I would favor S&P over the NASDAQ. But what's still trending higher? Look at this right here, gang. We have a beautiful green structure, green trend on, this is called the multi-trend, gang. I know a lot of you are becoming very familiar with the awesomeness that is very easy to understand market structure, right? So awesome. Now, that opens up a buy off not only the Darvis, but also the DPMR. So that range is going to be a buyable range. And expectations for follow through and things like the Dow are going to be higher than my expectations for follow through in non-trending indices like the NASDAQ and like the S&P. But why did I make the S&P an exception? Because the S&P and the Dow share two very important sectors: financials and healthcare. We're going to have to watch healthcare because healthcare is actually doing a pretty good job of punching up to higher highs and higher lows. It's probably getting pretty close to where the market trend is going to go from the neutral to the bullish. And that's going to help the S&P and the Dow the most. We also have to keep a really close eye on financials. We had some downgrades earlier this week, and whether or not financials really break the uptrend or whether they go back into the trend. This is now a transition. We're not sure if it's going to hold the trend break, but even if it does, it's still bullish. How do I know? Well, look at how long it has been bullish. right? So it's just going to a neutral environment. Neutral means I can focus on the DPMRs and I'll be a little bit more conservative, but we're still above the 200 propulsion. And generally speaking, this is still very much a bullish chart. This helps the Dow out a lot. All right, what about Russell? So again, the overarching conversation is it time to panic? It's never time to panic, but it's not time to turn into some kind of bear either. The daily time frames are still indicating that if we get support, there is a better chance of a potential buy. But for sure, we want to be a little bit more careful about how ambitiously we get bullish. And that's where it's going to make so much sense to focus on a lot of these daily price movement ranges on a 1-hour chart with far less expectation for follow through in terms of 1 to 3 days, maybe even 1 to 2 days. And then let's not forget about the day trading. Everything that we do, gang, has a couple things in mind. Market trend, the market structure dictates the strategy. And really, in many ways, the month of August is going to dictate our expectation for follow through or our time horizon. How long could we possibly be in the trade? So there's some great examples for setups. And I want to show you the 1 hour of the Russell and the 1 hour of the indices. If you want to short anything, focus on the 1 hour chart of the Russell. This is where if you're thinking, Rog, I'm kind of a bear. Fine. Look at the possible overbought Dow on the 1 hour. Here we are heading up towards the high of the slow stochastic. And if we can get that coupled with the resistance of the DPMR in the 1 hour chart, we can take a nice short-term swing. But please don't forget, there are places that are still in very good trends. We just scaled out of Johnson & Johnson in the mastery. We're going to be taking Johnson & Johnson over the weekend. Nice winner in J&J. Beautiful green trend. We also are entering the we want to get into symbols like XOP. We want to get into symbols like XLE. There's a lot we like. XLP, XOP, XLE, even the XLC, right? There are relative outperforming sectors. So it's not time to panic. It's just time to be discerning. So those are things I'd keep in mind as we go through this month of August. Thank you as always for watching. Thanks for smashing the like button. And of course, thank you for your comments and your questions. I read them every weekend, gang. So thank you again for your time. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.